Okay, so what you guys are looking at is the TradingView website. I use this very often in correlation with the HFX strategies. I just like to go here and do my analysis on basically the back end before getting into trades. I like to do my homework. But I want to talk about the consolidation phase, and what you're seeing right now is the Bollinger Band that I'm using, and also the stochastic oscillator that is on the bottom. Okay, so let me just turn this Bollinger Band off. And what I want to explain to you with the consolidation phase, especially for those who are new, you're going to see when you're in the HFX strategies, this is what it's going to look like. This is inside HFX Academy, and with this strategy uh, included, it will be the Bollinger Band. You'll have the 200 EMA. I'm going to explain all this with the 200 EMA. You're going to have this stochastic oscillator, and you're going to have the RSI. Okay, so um, the Bollinger Band basically, to make it very simple for new people, it acts like rubber bands basically. So the red top is, considered like the overbought area, and it also is considered the resistance level or zone for your price points. The bottom blue also is like a rubber band, so it bounces, up and down the Bollinger Band like rubber bands, and only like about 10% of the time it's going to protrude outside of the Bollinger Band. And when it does protrude outside the Bollinger Band, where you have this huge spike up, for once you start getting used to it and you see these actions happen in the market, those are usually times where I would get in and take a trade, whether it be for a buy or a sell. Um, but according to this, the 200 EMA is telling us the average momentum. 200. The reason why it's 200 is because it's counting 200 candles to give you its algorithm, and giving you the average momentum on where the trend is headed. Okay, so if I were to take this 200 EMA and drop it down to say 21 or 9, you will see this line get really close to the candles. Okay, so that's why when someone says 200 EMA, why they're using it, it's because 200, it's counting 200 candles within the market and giving you an average according to its algorithm, giving you an average of where the trend is headed. Okay, so if the 200 EMA is on the bottom, you can see that it is going to be an uptrend. If the 200 EMA, which is this purple line, is on the top, then that means the trend, the overall trend, is going down. It is a bearish trend. So another indicator that we're going to be using with this simple scalper um, strategy is the stochastic oscillator. Now, the stochastic oscillator, and I know a lot of people say overbought, oversold, but really it's just a momentum indicator. That's all it is. A lot of these are based on momentum of the market, the moving average of the market. What's the market doing? But to make it simple, we'll just say overbought, oversold. All right. So if it's overbought, when we're looking at this, it's going to be above the red dotted line. So this black line is going to be above the red dotted line when it's overbought. When it's oversold, what we're looking for is that it's below the blue dotted line, and that would be considered oversold. Now, the RSI, For me, I use it the way it's supposed to be used, and it's the relative strength index. Okay, so it's telling me the strength on how far the market will move. I don't look at the bottom, I don't look at the RSI as overbought, oversold, because I take my trades depending on how strong that move is, that price is at that specific time. So if I see that it's respecting this area where this would be the 30 zone and the red dotted line would be the 70 zone, if I see that it respects that area, then that to me, even though the stochastics is above, the bottom is respecting, it's telling me that it's not going to go too far, that it's actually like it's shot up. If you see this blue line, let me zoom in. Oh, blue candle, sorry, I shouldn't say line. If you see this blue candle right here, the stochastic oscillator is telling me that the momentum is going into an overbought zone already, but it didn't even touch the top of the Bollinger Band. So if I see that it didn't touch the top of the Bollinger Band, what I'm looking for is the strength. So I'm looking at the RSI. It respected the 70 area zone. The line is the 70 line of the RSI, and that's telling me that it's not going to go any further. It's not going to break through the Bollinger Band. So if I wanted to, I could get in for a trade for a sell. It could be a 3-minute sell or a 5-minute sell, depending on the chart that you're looking at. So if we're looking at a 1-minute chart, and this is a 1-minute chart that we're looking at, the rule that I stick with is 3 candles. So each candle is worth 1 minute. This would have been um, a very close trade because it closed out like right here. It wasn't that too far away. Some of you might have done a rollover. If you did, you would have definitely cleared. But a 1 minute chart, the rule is 3 candles. Okay, and that would have been a 3-minute trade. So if we're looking at a 5-minute chart, I'm doing a 15-minute trade. That's if I'm looking at a 5-minute chart. And that's specifically for this type of strategy. Now, if I switch over to Cash Trap, if I'm using Cash Trap, then I will follow the rules of Cash Trap. So the rule for Cash Trap, yes, a lot of the time is a 5-minute chart for Cash Trap, but I have to follow the rules that are with Cash Trap, and that's a 3-minute trade. You know, and sometimes you have to roll over. But most of the time, it's a great indicator if used the right way. You can't just go based off of arrows. You do have to do your analysis and due diligence as a trader, to do your technical analysis and fundamental analysis before just blindly getting into a trade. If you're blindly getting into a trade, then it turns into just gambling. What's the difference? You're just going to gamble your money based off one arrow, and for me, that's not cool. I work hard for my money. I know a lot of you work hard for your money too. So let's do our homework. Let's do our analysis before we take the trade. So going back, uh, let's see here. I wanted to, fun fact, uh, here we go. This is pretty cool. So this is what I mean by the stochastic oscillator. The stochastic oscillator is a momentum indicator, uses support and resistance levels. That's what I mean by we also say overbought, oversold, but the correct definition is right here. And fun fact, this indicator, has been developed since the 1950s, which is pretty cool to know. I don't know. I'm kind of a history guy. But yeah, this is how you would use the oscillator, and it's giving you it's based off of a resistance and support. So resistance would be on top, and support would be on the bottom. Every time it hits a support area, it tends to bounce. Every time it hits a resistance area, it tends to bounce down. So support, it bounces up. Resistance, it bounces down. So this is basically telling us, what the stochastics is basically telling us, that it's hitting a resistance area. So if you're watching this and you're looking at your stochastics, your indicator, and you see that it's starting to cross over and down, like if we were looking at the simple scalper, so it crosses down the red dotted line. Um, Here it's not uh, changed into the red dotted line. This is just a simple default setting. So if you see this, this is a resistance area. So if you look up top, okay, without even putting a resistance line, like actually marking it up, you can visualize it by seeing the stochastic, like, okay, wow, it's hitting a resistance area. So just wait for the crossover to get in on a sell. Now that's if you're just using the stochastics by itself. These are good ways to be using it and to think about it, like when you're not just thinking oversold or overbought, but you're thinking, oh wow, there's a resistance area zone that it's starting to hit. So be prepared for the reversal. Be prepared of what's to come. Okay, and that's as a trader, when once you start developing those type of uh, I guess habits, when you're looking at the stochastics or any of your indicators, once you learn how to use them correctly, you'll know what to look for. All right. So again, with the RSI, okay, so the relative strength index, okay, the relative strength index is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or the asset. So as you can see, as I was explaining, when it's below this area, the resistance strength, also known as, people say, overbought, oversold, when it's below here, what comes up must come down, and what comes down must come up. So this is how we would be using it if you're using it with the strategy in HFX. So if you're looking at oversold area, you can see that it hit an area of, you can also say support, and then when it's down here, it's on top, it's resistance. So it hit that area of support, and the relative strength, um, is also saying oversold. So what comes down must come up, and this is an opportunity to look for. Also, whenever you see it below, like my indicator, I actually set it up for 40 instead of 30. The default is 70/30. I changed it to 40/60 for mine because that seems to be the better sweet spot when using the RSI, because that's telling me when I use, right now it says 30, but if it stays below the 30, then that means it still has strength to push down. I see a lot of new people. I see a lot of new people getting in um, when it hits a certain spot, especially if they're using the Bollinger Band, and I'm going to explain that right now so that it'll save you from losing on a trade. Let's switch over. Okay, so what I mean by that is, here we go. Let's see. So this is right now. Okay, so for instance, perfect example. Okay, right here, we're looking for buy opportunities, right? Because the 200 EMA is below, and the overall trend is going up. So if we're looking for buy opportunities, and say for instance you're only looking to see a pullback come down and bounce off the bottom of the Bollinger Band, you would have taken a trade for a 3-minute buy. A lot of people, when they get started, they'll do that. And I mean, I've made that mistake in the beginning too. I'm just looking, for a buy opportunity, and I'm just looking to see if it's going to pull back, hit the bottom of the Bollinger Band, and get in for a 5-minute trade. And I wasn't, looking at the strength. I didn't do my analysis. I'm just going based off of, hey, it's an upward trend. It's going to continue going up. But as you can see, it's actually gone into consolidation phase. Okay. So right before the trend, this is what we're looking at. Let me put an arrow in here. We see it coming down. Okay. We see this coming down. And before any of this happened, say you didn't see the Bollinger Band starting to turn. Okay. So before any of this happened, you still see the Bollinger Band going up. This half on the left side still going up, and then all of a sudden you see um, the red candles, your sell candles, come down. You're like, okay, it touched the middle of the Bollinger Band, which is another form of a resistance and support area that we use as traders. Sometimes it bounces off that. Also, once it passes through the middle of the Bollinger Band, we're getting set up for a buy opportunity. And depending on where we get in, if we're not paying attention to the stochastics and the RSI was telling me that there is still room to continue to go down. Okay, there was still room to go down. So this um this opportunity wouldn't have been actually an opportunity for me. I would have waited for another setup, or I would have gone into a different currency pair for a better setup, because this wasn't a clear bounce up into the continuing the trend basically. So I was looking for the trend. I was in this setup looking for a trend. Well, we see the trend, but um, when I'm using this type of strategy and I'm going based off of a trend, if I'm getting into a trade because of the trend, this is what I'm going to be looking for are cross ups on both the stochastics and the RSI. Being that it pulled back, this is not something that I would want to get into. But you can see that it did not touch the bottom of the Bollinger Band. This would have been something that I would have waited for the opportunity to get into, to touch the Bollinger Band or break through the Bollinger Band. This wouldn't have been a clear trade for me. I would have waited because it already passed through the middle of the Bollinger Band and came down to the bottom half of the Bollinger Band. And for me, seeing that, and that's telling me that the market phase is about to change. Something is about to happen, whether it's the beginning of the top of the hour or a half an hour into the hour. Something usually always happens, and you have to be wary of that as a trader. Um, Now that we're in consolidation phase, the simple scalper really does shine with consolidation phase. Once the Bollinger Band starts to, bottleneck and condense, you're going to have more opportunity with the simple scalper. Like this is where it really does shine. And I'm going to share with you why it shines, because there's great opportunity here. Looking at the market, this is NZD USD. And since it's already going into consolidation phase, and this is what you're looking for, is this area right here. When it gets smaller and condensed, what I want to see is your candles touching the bottom of the Bollinger Band. Yes, you could have taken a trade here, but this is something that I would have waited for only because I'm looking at the RSI and that's telling me it still has room to continue to go down. So I would want to wait until the RSI is floating within between the red and the blue, and that's basically telling me we're going into consolidation phase, that the strength is not strong enough to go past the Bollinger Band or below the Bollinger Band, above the below, breaking through above the below Bollinger Band, let's just call it BB, and breaking the bottom BB. Okay, so this is a nice phase that we're looking to get into a trade if you're using the simple scalper. All right, so let's zoom in real quick, and you see this candle right here. It actually touched the bottom of the Bollinger Band. When it's in consolidation phase, that's the type of movement that I'm looking for to get in on a trade on consolidation phase like this. Right before it touched the Bollinger Band, what happened? Now in consolidation phase, it does not have to go past the dotted lines, okay? It does not have to go past the dotted lines, especially if the RSI is floating within the middle. So what happened right before, it went up? It crossed up. It actually didn't cross up, but it just went up. You see the line, the RSI and the stochastic start shooting up right before the second candle. So if that happens, and then all of a sudden I see the candle touch, drop down, touch the bottom of the Bollinger Band. Remember, the Bollinger Band acts like a rubber band, especially in consolidation phase. I would have taken that for a 3-minute buy. So 1, 2, 3, you would have cleared. Now, if you're taking multiple trades at the same time, if you know, for me, it's 3 trades. If I'm going to do, multiple trades at the same time, it would be 3 for me. So if I would have seen the candle actually hit the top, which it did, hit the top of the Bollinger Band, and then see these cross downs right after I took that 3-minute buy, I'm taking a 3-minute sell because we're in consolidation phase and all it's doing is bouncing up and down, up and down. And this is where this really does shine. So if I would have taken that, it would have been 1, 2, 3, cleared. Okay, I did it again. Dropped down, hit the Bollinger Band. What did it do? It went up on both indicators, and 1, 2, 3, it cleared. You got in here on when it touched the Bollinger Band. 1, 2, 3, cleared. Okay, so this is what I'm looking for when I get into a trade. Now, if you zoom in, this one did not touch the Bollinger Band, but we do have a clear cross up. Okay, so it dropped down. We're still in consolidation phase. It dropped down, and we have 2 cross ups on both the stochastics and the RSI. We have 2 cross ups. So what would you do? You get in for a 3-minute buy. 1, 2, 3. You would have cleared this. Clear that. Easy. Okay, so this is one of the strategies that I use, not just Cash Trap, not just Web Slinger. I also have my own, which is Slingshot. Some of you already know how to use that. I'll probably train on that on another session. Um, but this is what I use, and the simple scalper is simple. It's best used.